All right, well, let's move ahead from the budget to earnings. L&T Infotech, just like many of its peers, has reported a stellar set of third quarter numbers. Its net profit has jumped a good 38%. Margins as well have expanded. We have with us Sanjay Jalona, the MD and CEO of the company, joining in. Good morning, Mr. Jalona, and thank you so much for joining in. To start with, great revenue growth, great profit growth, margins as well have expanded, plus a strong deal pipeline. So what's led to this overall strength that we've witnessed across parameters?
Yeah, thank you. It's good to be here. I think all pillars of our growth revenue strategy, that is growth accounts, invest accounts, new account opening, and large deals have performed well in Q3. We did open 22 new logos. Our growth accounts and invest accounts have done very well across the board, across all sectors. We have closed 2 large deals of around $280 million as well. All of that has helped us. Our win rooms continue to be busy, and we are seeing broad-based demand across the verticals.
Mr. Jalona, what are the factors that have led to your margin expansion in the quarter? And more importantly, do you think that this margin trajectory is sustainable in the coming quarters?
Yeah, margin, if you look at the performance, we had a 70 basis points increase in the EBIT level to 20.6 and 130 basis points increase on the PAT level to 16.5%. Lots of factors, and strong growth drives up the opportunities for margin expansion as well. But we have seen an increase in the utilization as well as higher offshoring, which has led to this growth. As we talked about during our investor day in December, we have made investments in 2 new units, one for cloud and another for data. We have talked about increasing the investments on sales and marketing, especially with regards to these 2 units. And also, effective January 1st, we have 97% of our employees will see a wage hike, which will also have a 160 basis point impact on the margin. In the long term, the sustenance on the margin, we want, as we keep articulating for many years, we want to be seen as a growth company with a net income margin at 14 to 15% band. And if we grow faster, as we have done, we want to have the aspiration to be the leaders in the leaders quadrant, if not be the leader. That gives us opportunities for further margin expansion, and we put it right back into the business. So we want to keep it at 14 to 15 band.
Well, that sounds very encouraging. And you've also announced, large deal wins. Share with us the nature of this. Which industries are they from? What is your deal pipeline going ahead? And from which verticals and geographies are you seeing strong traction?
Yeah, so the 2 deals, we announced one deal with Injazad in December of last month. This is the largest deal for LTI ever. It will be in the area of technology vertical that you will see the revenues coming in there. And the second deal that we just announced is 75 million net new TCV, which is in the area of energy, oil and gas vertical. They will start pumping in revenues in the next 2 quarters.
TCS and Infosys have already shared that double-digit growth for FY22 is a possibility. So could we, would it be reasonable to expect that from your company as well? If you could just throw some color on, client IT spends?
We will close this year, FY21, at a high single-digit number. So obviously where we are, and if you do pure mathematics, I think double digits will definitely be a possibility. But we don't give revenue guidance, but we do expect to see a broad-based growth. We see a good pipeline. Overall, we see our large accounts, invest accounts growing well. Large deal pipeline is looking strong. We are having good conversations with our customers with opportunities. And in terms of the areas where we are seeing opportunities, it's predominantly in improving the resilience. How do you get more out of the investments in the run business? How do you operate in the new normal? Because you need to insure somebody without seeing. You need to do claims without seeing. You need to have onboarding of customers in a bank without anybody actually physically visiting you in a branch. So these are great opportunities for them. Direct to consumer is a great opportunity where we are seeing everyone look at how do you connect more with customers. And the workforce and workplace modernization, where everybody has gone back to working remotely. How do you make sure that they operate seamlessly in this new normal? These are the areas where we are seeing broad-based opportunities and growth ideas coming in.
Mr. Jalona, you've reported good growth in almost all your verticals, BFSI, retail, high-tech, etc. But there's muted growth in the energy vertical. I guess that can be explained for obvious reasons because of what we saw in 2020. But surprisingly, there's also a contraction in your insurance vertical. What essentially explains this?
See, let's talk first oil and gas. I think oil and gas as a vertical has been strained, for volatility and price fluctuations that we have seen on the oil and the crude pricing. On top of that, COVID has brought in additional challenges for this vertical in a big way. So that vertical overall is impacted. One of the deals that we announced, large deals that I talked about, 75 million net new TCV, is in this area, but we still are cautious on the spend patterns of our customers in oil and gas. Insurance, last few quarters has been a little tepid for us. We have created pipeline and we are looking at closing some deals in here, but definitely it has been a weak vertical for us in the last 4 to 6 quarters.
And finally, share with us your hiring plans for FY22. What's the kind of impact that you can see from the wage hikes, etc. on the margins? I know you flagged that off, but if you could just walk us through those details.
Let's talk about the second part of the question, which is what do we expect the net margin, for the company. As I said, please consider us as a growth company. We want to be seen like that, and we have stated guidance. The only guidance we give is on the PAT of 14 to 15% band. And if we want to have the aspiration of being in the leaders quadrant of growth, that gives us an automatic opportunity to increase the margin, but we want to fund and funnel it back to the business and grow faster. We've done one wage hike, which is effective January 1st. We will go back to normal cycle of July hikes and promotions as well. So, but we will be able to absorb all of that in that 14 to 15 band, looking at the pipeline of opportunities that exist for us.
Thanks so much, Mr. Jalona, for joining in and giving us a view on L&T Infotech's margins, deal wins, as well as the road ahead. That's been a fairly healthy set of quarterly numbers.